Hello, everyone. I hope that you guys had a wonderful weekend and also a wonderful Monday, right? So, today we'll be doing the usual. We'll be having our market overview since this is the first live stream for the week, right? Here on the screen right now, you guys can see that we had no news events today, and we still have no news events tomorrow, right? So, does that mean that, there will be nothing to do? No, that's not what it means. There will be something to do, but it will just be, harder for you to determine when to, pull the trigger. And this is why, I recommend trading only on, high news prevalent days. So just days that have high impact news events, right? For now, right, of course, you can use orange folder news at certain times, right? But, we're not going to get into that yet because now the main thing is just to get, everyone to be on the right side of the market, most of the times, right? You need to be able to find easy trades, and this is how you do so, right? As I've said many times before, the easiest trades will form on days that have high impact news events during weeks that have, less than 4 high impact news days, right? So, such as this week. This week is, is going to be pretty easy, right? Higher low of the week, will obviously be on Wednesday or Thursday, right? So either of those days, you manage your risk and you just go in, for the entirety of this week, just focusing on those 2 days, right? You are bound to find something to do, right? So we'll be getting volatility Wednesday. Most of the volatility will be Thursday, and then Friday will do what it usually does, and that it return to the weekly range. Here on the screen, right, you guys can see that this is, the 1 week time frame. So this is the weekly time frame, right? And right here, we're looking at sequential SMT between the years, right? We've never really delved down into this, but this is sequential SMT between the years, right? Of the, congenial cycle, right? So as you guys know, right, we can have sequential SMT between years, right? Here, this is the low of for this, and now we're looking at the US dollar. This is the low of 2023, right? This is the high of 2023 for the euro. This is the high of 2023 for the British pound, right? The US dollar has failed to break below last year's low. The euro has failed to break above last year's high, but the British pound has broken above last year's high, right? So here we have a cracking correlation, right? And also we have hidden, sequential SMT on the lower time frame as well. And, surprisingly enough, right, this occurs while we have, a uprising, happening all over the world. It's crazy just to say that because, we've been saying that for a while, but it's just been getting worse and worse and worse and worse. It's just that, we've, gotten used to how bad everything is. But, it's just getting worse and worse and worse and worse, right? And that's just how it's going to continue to go. Right, but it will not bother most of you guys, and that's, people that, partake in the skill set. You trade or, you do analysis, part-time for a company, whatever it is that you do, as long as, it's pertaining to this skill and, you're doing it on your own time, then, it won't bother you that much. Inflation and all of that stuff, it will be nothing to you. And if you haven't gotten there as yet, you will, right? So here you can see that we have these highs right here, which in my opinion, it doesn't matter what happens here, these will be taken out eventually. And whenever this happens, right, whenever you see price, do whatever it's supposed to do and continue higher, well, it's already continue higher already. And these highs, we are near to these highs, then you know that something big is about to, happen, right? But unlikely we'll have, back and forth, until, like the week before we have the US presidential elections. And then, like a week after or, within the week, we'll have some form of manipulation, and then, price will continue in its desired direction, right? It's pretty obvious. You see these highs right here. They're very close in perimeter, right? Basically, these are, relatively equal highs, relatively equal lows. This is diagonal liquidity. Here as well, we have a lot of liquidity looking at the British pound, right? And remember that this is not a lower time frame, right? This is the weekly time frame. So if price decides to shift in the direction that we desire it to shift to, or what our analysis or our tools are pointing to, right? Because that's what we're using right now. The tools that we, brought about to life, right? That's what we're using. Sequential SMT, we're waiting for precision swing points, we're waiting for SMT fills. That's what we're doing right now. That's it. We just go ahead, go with the system and just let price do what it's doing, right? Down here, you can see that, we had SMT here, which sent price higher. So here you had price take out this low right here, looking at the euro right here, right? We had price take this low out, and you'll see, well, some of you probably already know why I'm talking about this, right? And here, right, we had price take this high out, right? So here price took this high out, here price took this low out for the euro, but here for the British pound, price did not take this low out. Now, why is this important? Because it is a SMT low. SMT lows or SMT highs, once you have a larger range SMT or sequential SMT in the opposite direction, that would, cancel this SMT, which would, give rise to the magnitude effect, right? Which happens when you have a lower time frame SMT just becoming liquidity whenever you have a higher time frame SMT or larger range SMT, canceling this move right here. And that's why this low, is of interest. That's why this high is of interest. And that's why these lows right here, this low right here, since, this is the lower one, that's of the most interest. But first, we have to go through all of this. And of course, for price to shift in the direction that, we are anticipating or the direction that we want it to shift into, there must be a, major news event, right? Something must happen. Something has to happen, right? All of these, large ranges that were formed, price dropping here, price going higher here, right? Price leaving here to go higher. Everything happened, right? Or the news happened because price allowed it to happen, right? Or, whichever way you want to put it, right? You can even say that, price is just following the news, whatever it is, but, this is the basis of all of that. Here you can see, right, this candle right here, it's today's price action, which is, Monday. And, it is a small range. And as you guys know, while price was forming this SMT here, we talked about it. While price was in this consolidation, when this candle was, being formed, we expected higher prices for the dollar. We talked about the sequential SMT that was here, the sequential SMT that was here, and the one that's here as well, right? But here you can see that we have this small range candle, that determined the daily, range today for the dollar, the euro, and also the pound. As I've said before, and I'll say it again so you remember, whenever whenever price action like this should occur, and what should you expect in the index futures, right? So for now, before I go to the index futures, there is nothing right here, to work with. Why is that? Because you cannot determine SMT, sequential SMT, from candles that are expanded, right? You need, candles to consolidate, and then you have sequential SMT or precision swing point or anything of that sort, tracking correlation, whichever one you prefer to look for, whichever one presents itself, to cancel this expansion and allow price to return to the range. Unless the SMT, right, is of a larger range than this one right here, and you determine the range by just basically counting the candles. So from here, this low, right? As long as it's low, the candles of the range are lower than this range right here. So for example, here you have, you could have 5 days or 3 days cause SMT. It will just pull back within the range and continue higher, because that lower time for SMT will not cancel this one, right? Just as over here, you can see that we took this high out, we took this low out, did not take this low out, right? It will not cancel this. So here you can see that we have the 3 main index futures that we focus on. Right here, the S&P 500, the NASDAQ, and we have the Dow right here. So right here, we are consolidating within a range, right? And of course, looking at this, it seems a bit boring, but it's not. This is the best time to be focusing on price, right? This is the best time to, just be reading price or anticipating a shift in structure, anticipating sequential SMT. So here already you can see that, we just wicked below this low right here, right? Price did not close here. Looking at the forward time frame, it did not close here, and that's very important. Remember, looking at the forward time frame. So in order to determine a tracking correlation between the weekly cycles, which is what we're looking for right now, but between the monthly cycles, this is what we use the forward time frame. So here we have a blank week, which is what we will use to anticipate a tracking correlation between the first week of the month and the blank week of that was last week, right? As of the blank week, it's it's pretty simple to see visually what it is, right? There we had Q4, then we had a partial week, which is what we call a blank week, right? So if we have sequential SMT below here, right, either we have the S&P 500 sweep here, we could see price continue higher, or SMT here, we have NASDAQ fail to sweep here. This stabs down once more, right? Or we just see a lower time frame sequence SMT and price will just go higher, right? So for sure, right, we have highs, and we could have highs at these highs right here. These highs are equal highs, right? So we're just within this range, and we'll just be playing within this range, right? Price drops here. There's a reasonable cause for price to go higher, right? We participate in the buy and, get out around these highs or around, a new week opening gap that's here, take profits, whatever it is, whatever you prefer, right? So first, there could be a sell coming in. So you could be a, seller even here, take these low out, you get out. That could be a trade for the entire week. Or price drops, it continues higher, and that could be a trade as well. Right, and remember that we have CPI, right? Impact news event this week. So just be mindful of that. So here right now, you can see that we have, these candles being highlighted. What are they? They are precision swing points. Of course they are, right? And the reason why they're highlighted is because that we have these precision swing points formed here within gaps, right? This is within a fair value gap right here. This is within a fair value gap right here. And this is within a fair value gap right here. And price traded here, by the way, there was SMT, right? We had price take these highs out, failed to take these one out, and the same thing occurred there. Right? Also, right, if you guys remember from the last live stream that we had, we discussed, about higher probability entries, right? One of the highest probability entries that you will ever have, right? And you can study this, right? You can just try to prove me wrong, but even just using this, if you're a person that likes to scalp on the lower time frame, you are destined to get a reaction, right? So here we have price, trading up into this gap. Turn on your new opening gap indicators. You can see that we had a new opening gap overlap with this gap right here, right? So if you're a person that you're looking for something that, very simple to follow, this is it, right? New opening gap overlapping with your fair value gap. Persistent swing point forming within that, right? And you will, be fine most of the times. Here, persistent swing point within the gap, persistent swing point within the gap after we had SMT. So most of the times, you're going to hear me say to stay away from, SMT that is not sequential. That's not the case all of the times, right? There are times when you have something that occur after the S&P, such as before I've spoken about. This should be sell side. I've spoken about waiting for sequential SMT to form after SMT, but now you can wait for something like this to happen. You have SMT, and then what do you have afterwards? You have price breaking down, right? Oh, and the gap opens just around a new week opening gap, and you're just looking back at 10, right? And this makes it easy for you, right? This right here, if most of you guys haven't grabbed this yet, that's what it is, right? You shift between 5 and 10, right? To use this, you want to look at 10, right? The same right here. That's it. And also keep in mind, of course, the very important, the true opens, right? So here we traded above the true open of the New York session. Then, this was our level of resistance, right? And then price dropped lower. Below this low, we had another New York opening gap. That highs and lows that have New York opening gaps, tend to pull price to them. Here, below here, we have sell side liquidity. So we could be looking for, price to be drawn to these lows right here in the near future. The same thing for here. And if one of these lows were taken out and the other one is left, then, that is sequential SMT, right? But yes, eventually, I believe that we will see price taking these highs out as well. But for now, you'll just be seeing price moving from liquidity pool to liquidity pool. Here, right now, we have Bitcoin, right? So you already know, right? My main draw on liquidity for Bitcoin at the moment, and it's not that, I am extremely bullish on Bitcoin or anything. This is just the immediate draw on liquidity, right? It's these highs, right? It's just too obvious, right? Of course, before we might see, more of this type of price action, just to, shake out early buyers, get people to short, to just squeeze them, right? So is Bitcoin something that's high probability right now? No. Can you trade it if you wish? Yes, if you have a wide stop loss or if you just get lucky over times, right? Because here you can see that we had Turtle Soup right here. Perfect buy with this fair value gap, price went higher, failed to break above this high. And we were a participant of this, but price ended up, dropping back down, right? The same thing here, right? Price took this low out, continued higher, failed here again, then just dropped. Took this low out again, continued higher, failed again, dropped here, dropped within this wick, continued higher, right? And then up until now, and we expected price to run above this high, it did, but then we just had price fall back within the range. So the best thing to do if you're a person that is a fan of Bitcoin, a fan of cryptocurrency, is just wait until price breaks out of the range, and then you will find something to do. So I hope that you found this useful. We will be back. Let me look. We'll be back at Wednesday at the same time. So I want to use, the next few minutes, like 5 minutes, answering questions if anyone has, right? So you can ask questions right now. So if you have any questions, you can ask them right now. If not, then we will just end right here. If you're watching this and you don't want to hear me answer, answering questions, then you can just stop right now and just rewind it. It's recorded, so yeah. Can you tell us why you never talk about the use of DFR? What's the first thing you taught us and seems to be a fundamental aspect of quantitative theory? What's the reason you never talk about it? Because it's not that important right now, right? And of course, we will, elaborate on most of the topics, right? What about the content for 2024 class in 2025? When that comes, you see it, right? 2025 will be very exciting, right? 2025 will be, way more exciting than this year for sure. Because, after that, all the liquidity from the presidential election will be injected into the marketplace. So there will be a lot of movement and other things. You said exit on higher time frame and exit. What? You said enter on a higher time frame as sequence SMT and exit on lower time sequence as sequence SMT. But if there is higher time frame sequence SMT, doesn't that mean that the lower time frame sequence SMT is just SMT market structure shift? So SMT market structure shift is just that, what it is. SMT market structure shift, right? It's not sequence SMT. It will just be regular SMT, right? That's all it is. Can you talk about gold? Yep, for sure. I can do that. I can add that to, the streams for sure. So yeah, I believe that will conclude, today's session. We'll be back here Wednesday. And if we have time, we'll be back here Saturday again. I hope that you found this useful. Ciao.